All right, guys, hello, welcome to Thursday, the 26th of March. Let's get straight into today's trade recap. Okay, so go into the notebook. Um, I'll do this at the very end. Okay, I'll do this at the very end. But basically, we came into the day, economic calendar, unemployment claims at 8:30. Okay, so I'll let you know now, there was not a lot of volatility. Okay, there was not a lot of volatility. In terms of weekly and or daily analysis, so we look to be relatively bearish at the minute. Why? Well, we had an SMT, we swept, ignoring this candle, previous day's high. Okay, and we have an SMT. Okay, we have an SMT. Where can we target? External liquidity here. Okay. Um, on the hourly, what do we get? We get a bearish market structure shift. Bearish market structure shift. Okay. We get a change in the state of delivery. Okay, so what do we look to be? Relatively bearish. Okay. I'm seeing that NQ took out the intermediate term low. Okay. Bank. Where an SMT possibly forming an ES. It does. Okay. We can see that we are also retracing on this leg, right? We've got the nice like area. This is the discount area, right? And we've tapped into it. Okay. The 1 hour has a bearish gap that NQ just about taps into, and we have a runoff. And then we get yet another SMC here, right? Do we see how ES wicks in again on this gap and then it moves lower? NQ holds weakness and it moves lower. Okay. So we are bearish, right? Ultimately, we are bearish. Just try to ignore this position. Midnight open price does no manipulation and we just move it instantly lower. Okay, straight away lower. This could be either the manipulation leg or we're just confirming bearish prices. Okay, looking at the sessions, Asia takes out its own high and then moves lower. Okay, and then London retraces back up into this key level and then it moves lower. Okay, so what could we expect? London reverse New York continuation lower. Okay, we get an SMT here at these highs. Really, I should have taken nothing but shorts today. Okay. But yeah, that was the main thing. We look to be bearish on the day unless New York AM causes a bullish reaction of the 4 hour bullish gap, right? And the sweep of the intermediate term low that we saw on the 4 hour gap. Okay. If this 4 hour bearish gap forms at 10 a.m., we could see a possible retracement into it before moving lower. Okay. Coupled with the bullish SMT, right? So we could possibly catch a long, or we could be patient and catch a short. Foreshadowing, this doesn't hold, right? It gets pretty much opened up. Now, post market, New York AM opens, okay? And what do? We have an SMT, I'm pretty sure, right? Obviously, we open and we're just chilling in this gap, right? Here, we still have this SMT holding, right? We still have the SMT holding. We have another SMT at these bullish lows. So we can see bang, bang. We're looking to be quite bullish now. Why? Well, we have a market structure shift, leg, retracement, and we could expect higher prices. What does it do? It was higher, right? This is the 1 minute, this is that structure shift and whatnot. And this is, we're getting a larger space and leg. This could be us manipulating higher, closing out the possible 4 hour gap before the 10 a.m. candle opens, which is exactly what happens. It's exactly what happens. And this was my trade idea, right? I'm taking a long in a bearish market. First mistake straight away. This is the range, okay? And I was waiting for price to tap into this area, which is what I think it was a 5-minute rejection block, 15-minute rejection block, in which we have a nice entry on a discounted gap within the rejection block. TP is at Asia session high, and obviously London session high is there as well, right? I was staying patient. If we take out London session highs, I'll avoid the trade and look to enter possibly short, okay, on a rejection block, right? Look to enter short. But yeah, that's literally what I wanted to say on that one. Price seems to be finding its balance at the point of control, right? So we chop around a little bit at the point of control. And like I said, obviously, if we do get a rejection block from the London intermediate high sweep, I could look to enter and go short. We are quite close to the draw, and if it does get hit, it removes my draw liquidity on this long trade, right? Excluding Asia, right? Now, what happens? Price taps me in. Okay, so we do get the decline, and I get stopped out very quickly. Boom, two candles. Two candles stops me out. Okay. Now, the lessons learned from today's trade. There's a couple of things that went wrong, right? So the first one is let me just quickly do that. I traded against the high time frame narrative of a bearish bias, right? We were super clearly bearish. Okay. This doesn't necessarily mean that the market is going to tank down by a lot today, right? That's not the point when I say bearish bias, but it's a point of you're going to get more volume in declines than in rallies, right? A rally is going to be a retracement, okay? Here, it was a retracement into a 15-minute gap, I think, or it was into the we had the 4 hour gap form, but it was so small and price did exactly what it wanted to do. It tapped it and suddenly spit, filled it in, and we had a massive decline, right? Um, but yeah, that's what I said. And then another thing here is that my stop loss was possibly too tight, right? So in the rejection block, it was a bit too tight. I had it literally right here. Could have put it here, which would have kept me in for a little bit, but even then it doesn't matter because we declined, okay? Overall, I do like the idea of rejection blocks for entries because, like I said, they're going to get you in and out of the market very quickly, right? I do not want to have to stare at the charts for hours on end, patiently waiting. I mean, in terms of patiently waiting, this I can set up and leave, right? I look if it's been hit, void it, look for another entry, right? It's not a thing where I want to be looking at every single 1 minute candle. Is that really get being filled? Is that not being filled? You know, it's too much for me. It's too much. Okay. Obviously, that statistically means that my win rate will be smaller, but it evens out by having a larger risk to reward ratio. Okay, this trade would have been a 3RR. Overall, regarding the strategy, it was good, right? It was okay. We had a higher time frame, not a higher time frame, but within that displacement leg, which I misread as an actual displacement leg, but it was a retracement leg. We did have a change of state delivery, a market structure shift, and all that stuff. Okay. Um, yeah, it wasn't. But the point is, nothing. There was nothing that broke my rules. Okay, we still had the drawn liquidity active, right? So the things to take away from the session are: do not go against a high time frame narrative unless you have reached a key level in which there is going to be a clear reaction off of it, right? Here we were in the 4 hour gap, but I wouldn't I wouldn't say it was entirely accurate. Okay, maybe I could have caught an entry here, right, where we tap into, I think, maybe this rejection block on a 5 minute, but even then it's a bit too risky. Okay, maybe here on this rejection block, 50%, and then obviously could have been rallied, right? But he say, she say. Okay. B, the next lesson is to backtest and work on the stop loss placement of this strategy. Okay, I want to continue working on the rejection blocks. Okay, I need to figure out how many points is a safe area for a trade like this, and being able to spot the difference when I'm obviously squeezing my stop loss. Work on my entry levels and targets too. This entry could have been a little lower at the 50% region of the high time frame rejection block, rather than at this fair value gap. Okay, so my entry was at like it was at this level, the 0.79. Is it the 0.79? Just quickly draw out my fib. 0.79, yeah. But yeah, that's pretty much it. We can see that obviously, look, we tap into this small gap. Actually, no, it's here, isn't it? Yeah. So on NQ, what do? We just about tap into this gap, right? Look at that. That's the most perfect fill I've ever seen. And then coincidentally, we get a massive down close. Okay. Could there have been a entry? Well, we have a 15-minute nice rejection block. All right, let's go into 1 minute. What's the area of entry here? Well, literally just the 50% level, right? Stop loss where? At the high. And what can you target, right? Well, we can target the resistance liquidity right here. That would have been a 1 to 7R, right? You probably would have been stopped out here because we see it wicking unless you kept your stop loss there. Actually, no, even at break even, it would have been fine. But yeah, look, that would have been a trade within half an hour, right? But yeah, like I said, this is just something that I'm gonna have to work on. I'm not, sad about it, but it's just obviously something new, and I'm liking rejection blocks. I feel like this is something that, it's just interesting and cool and just good, right? But yeah, we can see that we've had a massive range today, massive decline. So it was a Thursday decline on this day, right? Anyway, that's that for today's trade recap. Hope you guys learned something from it. But yeah, I'm gonna backtest this strategy after my KFC, which I can't wait. And yeah, I'll see you lot tomorrow. Bye bye.